Hey traders, this is Blake Morrow. You are listening to the week ahead video for June 27, 2021. Hope you guys are having a great weekend. I have a very exciting video for you today for a couple reasons. First of all, next week we have the jobs report, and the jobs report should induce some volatility in the markets. There's other events that are happening throughout the course of the week, which we'll talk about. But I wanted to talk about what's happening with this next week. But I also wanted to mention you want to try out ForexAnalytix. And the reason why I say that is because in about 2 weeks' time, we have some pretty exciting news coming to ForexAnalytix in the ForexAnalytix family. So for those of you that are not involved and not subscribers, it's only $1 for 10 days. Try it out. And when you try it out, download the mobile app, put it on your iPhone or your Samsung device or whatever, your iPad, whatever you've got, and jump in our chat rooms and try it out. Because in about 2 weeks' time, we're going to be making an announcement as a company, and I think those of you that are not part of the ForexAnalytix family are going to want to be part of the ForexAnalytix family. And for those of you that are already supporting us and you're already subscribers and clients, you're going to be really happy. So, and by the way, for those of you that are subscribers right now, thank you so much for your continued support. I appreciate you. I know the rest of our team does. Okay, so thank you very much. Also, while I'm at it, hey, if you like these videos, you like what we do for you each and every week here, give us a thumbs up, subscribe to the video down below, subscribe to the channel, down below, so you don't miss any of our great videos that we do throughout the course of the week. All right, let's get to it. Let's talk about this next week. Now, I'm actually going to take you into some live charts as I normally do because our team is still putting together the analysis over the weekend, on our platform. So most of the analysis that you see here right at this point in time is all from this last week. It's getting updated throughout the course of the weekend, especially the basic technical analysis, the candlesticks. But I really want to talk to you about what's happening before we get into the dollar, I want to talk to you with what's happening with Bitcoin. Bitcoin is actually approaching that 30,000 level, and it's trading heavy, right? 30,000 is a big level of support because if we drop below there, the market is then starting to target that 20,000 high watermark from December of 2017, I believe. Now, the reason why I bring this up is because Bitcoin has a lot of institutional money involved now. And so if we break below 30,000 and we drop towards 20,000, that's a big percentage-wise drop on a pretty big asset. And so if that happens, it might translate into some selling of other assets. I'm not sure what, but I think the market is really looking at this 30,000 level. And I think institutions are preparing for a move from 30,000 to 20,000. Maybe they're buying some puts, but I tell you what, if I was long Bitcoin, I would be really on my toes here. And I think most people are. So you've got Bitcoin at 30,000. You got Ethereum that's trading back below its 200-day moving average. And, we break through 1,700 and, things could get a little bit squirrely to the downside, I would think. So if you guys are trading cryptocurrencies, just keep that in mind. Really do. All right, so let's talk about fiat currencies. Let's talk about what's happening this next week. So we do have the jobs report on Friday. Because of that, we're going to have the ADP. We're going to have the ADP jobs, the private sector jobs on Wednesday of this next week. You're going to get some PMIs. All very important data that's going to be factoring into this next week. The one thing I have to point out about the dollar and the dollar index, I expected the dollar a couple weeks ago to rally off of the support, and we have. What I didn't expect is the dollar to continue to hold gains so well. As you can see, we have this wedge. This is a pretty big wedge that's been developed with the dollar, and we're holding above the 200-day moving average. And I know I've made a stink about this even on Twitter. For those of you that don't follow me via Twitter, I'm Pipzar on Twitter. I even said that the dollar's holding up. And I know all of our traders know this that listen to me on a daily basis. The dollar's holding up a lot better than I thought, especially in this environment. When you have stocks that are near all-time highs, and I am expecting the S&P to rally towards 4,300, maybe even 4,380, and I can dig a little bit deeper into this chart here in just a second. But with the S&P as strong as it is, and global equity markets as strong as they are, I am still very surprised the dollar index is holding above the 200-day moving average. Now, if the S&P finds some resistance soon, then the dollar, that might be the invitation the dollar needs to really stage a rally. And don't forget, the dollar was the most shunned asset class at the end of 2020. That's a big deal. The best trade of 2021 for most banks in the FX space was sell dollars. Euro is going to be trading at 130 or higher. Everybody that's read all the bank reports and bank analysis at the end of the year, there wasn't one bank that was bullish the dollar. Not one that I read of the major banks. And so because of that, it wouldn't be surprising to me to see the dollar really continue this rally. Now, look at the dollar index. Before I go back in the S&P, notice how we haven't even been able to pull back a 38% retracement. When you have a very shallow pullback like that, that really puts risk to more upside pressure. And that's where the dollar's at right now. The dollar actually looks on the verge of breaking out and moving towards that 92.40, 92.50 key level of resistance. Now, the S&P though, let's talk a little bit about the S&P. We're nearing the 127% extension of this last move lower following the FOMC. S&P is extremely well bid. And also the previous May high to May low, 127% extension also comes in at 4,300. I expect that to be tested. But what happens if we go even further? I think the S&P could actually make it towards 4375. That's the 161% extension of the May range. If that happens, the dollar should continue to struggle. Now, how would the S&P make it up there and the dollar index stay suppressed? My opinion would be by the end of the week, if the jobs report does not meet expectations. Now, we are expected to create 700,000 jobs. The Fed is really looking at employment. The Fed wants the jobs picture to continue to improve strong. And if they do, they might get a little bit more hawkish on the economy, and that means less liquidity in emergency liquidity coming into the market. That means stocks might actually go down. So you get the opposite dynamic, right? But if the jobs data is not that good, let's say we create less than 700,000 jobs, which I think the whisper numbers are closer to, 800,000, 900,000, somewhere above the 700,000 number. But let's say we create less than 700,000 jobs, the Fed might actually, continue to be very dovish on the employment picture, and that's actually good for stocks. Stocks would go up in that environment, and that means the dollar would stay suppressed. So what's going to push the dollar higher at this point? I think good economic data. Now let's also, since we're on the topic of economic data, let's talk about the Eurozone. Okay, the Eurozone. If you listen to Christine Lagarde from the ECB, she accentuates the fact that the inflation picture is much different in Europe than it is in the U.S. And in the U.S., we have a little bit more of a inflation problem. In the Eurozone, they wish they had more of an inflation problem. And so, with that being said, with the inflation data coming out of the Eurozone on Wednesday, I think the market's going to be paying pretty close attention. Now let's also take a look at the daily chart of the euro. And I still think we're in this consolidative pattern, but notice where we're stalling. We're stalling below the 120 level. Now the 120 level is big for a multitude of reasons. Okay, first of all, it's the big figure. It's 120. It's big. You think about it, above 120, I look at it this way. Above 120 is bullish. While we're below 120, it's probably bearish. And we have this bearish pennant. It's also a big deal because it's also the 200-day moving average. You'll also notice it's the 50% retracement of this leg lower. Okay, so while we're below 120, I think we have to stay bearish the euro. If we can get back above the 120 level, that might signal the euro is going back towards 122. Again, we have CPI data early Wednesday morning or, from the Eurozone. And that could be the catalyst ahead of the jobs report to move the euro and the dollar index. But also keep in mind that a lot of these currencies, like, you take a look at the Aussie dollar is still trading weak. Remember, we came out of a bearish wedge, or a bearish triangle, excuse me. And that triangle, just so you guys can see here, it targets a couple areas. The maximum extension of this triangle, well, actually it could be even further than this, but I think this is a realistic expectation. Once we broke down, you're looking at a move down towards 72 cents. The minimum expectation of this triangle breakdown should be right here, which is 73.50. So somewhere in this area is where I would expect the Aussie to eventually trade to. Could it trade further than that? Absolutely. It depends on risk appetite and everything else. But near term, that's what I'm thinking with the Aussie. So yeah, we recovered this last week. Sure, we did. The Aussie bounced back above the 200-day moving average. And could it go higher from here? It absolutely could. But notice these long wicks, especially on Friday. Whenever you're leaving long wicks like that, that means buyers try to run up the Aussie and they fail by the end of the day. And so the more we do that, the more buyers are going to get a little worried about being on the long side, and they'll turn around, they'll start exiting their positions. So just keep an eye on the Aussie, keep an eye on the euro. I think the sterling is also trading heavy. Following the Bank of England this last week, we could not get back above 140. So while we're below 140, it's kind of like the same thing as the euro being below 120. While the sterling is below 140, we are at risk of a big double top. And if you're long the sterling, holy cow, man, if we break back below this 36.50 level, we might see a really big move lower in the pound. And I think a lot of sterling bulls are looking at the market right now going, geez, it's not looking as hot as I had previously expected, excuse me. So that's something that I'm also keeping an eye on. The dollar does look constructive against a lot of different currencies. And it's all going to come down to risk appetite. The S&P continues to be strong. And while the S&P is strong, that should keep the dollar suppressed. But in the event that the dollar pulls back, that the S&P pulls back, that could be the underlying catalyst that drives the dollar higher. Also, one last thing I want to mention to you. And before I get into this last thing, guys, if you're liking these videos, give us a thumbs up, subscribe to the channel so you don't miss any of our great content that we provide you throughout the course of the week. And give us a thumbs up. It's Saturday. I'm sitting here with you guys. I hope you're enjoying it. Makes me feel good when I see a bunch of thumbs up. So thank you so much. Now, one last thing I wanted to mention. We have an OPEC meeting this week. Okay. And the market is expecting for production to be increased. But that's already widely expected. So just keep that in mind. Crude oil has had a hell of a run. And if you look at crude, just technically, let's talk about, let me go over to the crude oil continuous. We're near the 161% extension, and we're already in the wedge triangle target zone, which would be right here. Okay, it's like the opposite of what I was showing you with the Aussie. Okay, see, this is the minimum expectation. That was the maximum expectation. I mean, we could still go higher, but notice that we're at 161% extension, basically, of this last move lower. And relative strength continues to be pretty divergent up here. So we might make a move above the $74 level, maybe up towards 75. And but just keep that in mind that we're reaching some pretty high targets. We're overbought on relative strength. And with the OPEC meeting and with all the expectations, just, these OPEC meetings can create lasting highs or lasting lows. Since we've been moving higher, it could create some sort of high in the market. So just keep that in mind as we head into this week. So guys and gals, my name is Blake Morrow. I want to say thank you all for your continued support. Thank you all for spending your time with me. I appreciate it. And I will see you on the Monday morning F.A.C.E webinar. Thanks everybody for tuning in. We'll talk to you soon.